Okay, everybody, welcome back, and let's go on and get started into the charts. And Bill says, "Hey, Paul, good morning. What is a good proxy for the R&R, i.e., quote futures?" I think you can get it off investing.com. I remember Blake pulling that up before. I usually don't get too much involved in that, but I've gone when I was following the Aussie closer about actually a year ago, a little over a year ago. I remember it was February last year. I was thinking that we were going to get a decent, I think at the time, a decent little drop, and we did. I was paying attention to the iron ore, and I remember, I think Blake pulled it up like on investing.com, but I think you can also just Google it, and there was a place that could give you, I don't think it's got real time, but I think it gives you by end of day or middle of the day, something like that. Jack says, Pauly, thanks on the superb webinars, mate, and apologies I'm not able to make it to most of them. Oh, thank you, Jack. Says, on the healthcare bill, you indicated that it might only be after the market close. Any updates on this? I think it's going to be towards the market close. I think it said there's a report, well, actually it's cited on Live Squawk from, what's her name, something table, whatever her name is, but anyway, on CNBC, that it was between 3 and 4 p.m., I believe, Eastern time. Charles says it's minevesting.com. So that bill link, if you look at that, it's well, actually, hang on, let me take a look, just making sure. Yeah, minvesting.com is what he's saying. M-I-N and then V-E-S-T-I-N-G, minvesting.com. So let's go on and, we're hitting the charts now, but let me go and move over the bias chart. I don't want to lose it like I did the last time yesterday. It caused a lot of issues. I don't know why this thing doesn't just roll over. I have to click on that thing now. Okay, here's where we were yesterday. And we did come down to that. We mentioned 752, but you can see that 762 held, and we pointed out on the daily chart how significant that was. LB says if I can post a site that Charles just mentioned. Okay, let me go on and do that real quickly. And I'm just going by what he showed here. It's Charles says no. He said it should be investing.com. Investing.com. So I think we all know how to spell that one, not Minvesting. He corrected and said investing.com to get those iron ore quotes. So investing, investing.com. So for those of y'all that are just coming on, we had pointed out about the euro on the daily chart. We did that earlier in the week, and you can see here how the market, defended this 762. We pointed this out, I think it was on Tuesday, and how the market, made the stab. We closed right there, like a hair below it, and the next day we popped above it on the stops, but we didn't close. We closed, below this, opening the door for a test to push lower with the momentum. There wasn't a whole lot of follow through, but we did go lower. We said there was a potential at the time. I think I said 707 potential. We could get down there. We only made it down to, let's see, it was 718, but I thought the potential we could get down there. I don't know if that was the buy support, but I was saying, hey, we can get down there to 707. But we only made the 718, then we launched up pretty nicely. And it looked like, this market was really going to take off. We hit the stops, and then we backed down, and we found support earlier today at 762 in the Asian/European session. Let's go into the 2-hour charts. On Fridays we like to take our time. Obviously, there's not a whole lot of movement. We spent yesterday a plethora of time focusing on how, not from a fundamental standpoint, but how the market was looking at the impact of that healthcare bill, how it was going to basically be like a litmus test on President Trump's ability to legislate. And basically, the market had run so far in the S&Ps that the market was basically saying, "Show me what you got, put up or shut up," as far as price action. And that's where we'd seen this S&P pull back. We thought that there was that risk there. Um, but like I said, as we noted here, you saw a very nice rebound back here in the euro, which was, on the backdrop of these amazing PMIs. And I say amazing PMIs because they were amazing a month ago when we stressed it, that it was at 5-year highs. And I was like, wow, I don't even see how the euro can be weaker. It's like, I think the euro was like in the fives or something. But the euro positively diverged from the dollar, even while the cash dollar, not this last time. Oh, we did this last time, but I'm saying is even before then, about 2 weeks even prior to that, when the dollar was really pressing harder, even though the cash dollar index is comprised of 56% of the euro, it was still pushing lower. The euro was definitely positively diverging. That was about a little over 4 weeks ago. And then a couple of weeks ago, right before the FOMC. So we've talked about this and said, hey, look, we thought that once we got past it, there was a chance we could get up to 859. And there's nothing that appears to be stopping it at this point. What you have to look at is what's the possibility of the volatility. So obviously the 762 is key on the daily. But I think that when you look at the not only the positive numbers coming out with these PMIs are just simply amazing, because now we're almost at 6-year highs. And then I think, rebalancing of the valuation. We've already seen bank after bank after bank reining their forecasts on, euro below parity. So if you think, okay, well, maybe it isn't going to go below parity, but people have to rebalance it, then yeah, we should be able to make it to 109 and potentially even to 110. We might even poke our head above 110. So, and then the thought is, hey, the ECB is going to have to lessen some of this loose monetary policy. They're getting a lot of, hard push for that, out of Germany. So when you look at those things and say, well, golly, the euro hasn't even, it's held up so well, it hasn't even got close to parity. So if they're going to offset this, then it's probably going to, just like all markets, everything else, you swing to extremes. So potentially we could see this euro go much higher. So as I said, we've been talking about going past this area here, the 859, and hang on. So looking out, what's realistic? Well, I think what you have to, if you're looking for outside targets, I think you have to be, it doesn't mean we're going to necessarily get there, although it looks, there's probably a decent possibility, but you have to look at this 934, the 61% of 310, the lows. I'm sorry, 340, the lows to the U.S. November election high. So when you look at it in that vein, like I said, 934 looks reasonable and doable, especially when you look at not only technically standing, but you also have to look at the supportive data that you're seeing. So even those, you or I may not pay that much attention. Well, I do, but that's attention to, let's say, the fundamentals. Although this is huge if it's purchasing managers, because you're seeing it continue. There are those that are going to, with big hands, are going to buy on that and say, hey, look, we're looking for a major shift. And when I say major, in the sense that, probably a decent chance to get up to 110. So those people, like I told you before, they're not going to be shaken out of the trees very easily unless we take a profound reversal. And they'll probably just lighten some of their positions. So they're going to feel like, hey, this euro has a juice in different areas to really make a run up here. Yeah, Tony, it says, Brian says, Tony Dwyer just put a tweet out completely agreeing with you on the Eurozone. Well, it's not even, be honest with you, it's not even me. I mean, I appreciate you saying that. I mean, but it doesn't have anything to even do, um, yeah, I see that. Um, yeah, it doesn't even have anything to do with me. I'm just saying is one of the things I learned the hard way, sometimes that's the only way we learn stuff. And I know I've had my share of having to learn the hard way. I told you before, one of the biggest, I remember we talked about the flows yesterday, and we have more time, like I said, on Fridays, and there's not a whole lot moving. We spend more time kind of reflecting over the week and stuff. But like I mentioned yesterday, I remember when the Eurozone was in the middle and the throes of all this mess in 2012. And the Euro's going up to 124, 126 and moving higher. And I'm like, this is ridiculous. This thing should be going into the teens, at least 117, blah, blah, blah. And, Mark Dahl was talking about the flows and whatever, because we had those interest rate differentials. And so when you see something change, and he's saying, like, I think Tony Dwyer saying something about, he's saying a shift in, an investor psyche. When you start to see that, when people say, wait a minute, this market has been going down as far as employment and purchasing managers index for 5 years. So when you get a big turnaround like we saw last month, the best in 5 years, and they've expected a dip this time, and then you add on to that, then people start to say, wait a minute. It doesn't mean that the Eurozone is going to take off like gangbusters, but they say, wait a minute, we're starting to see a shift. Now, it doesn't mean like, let's bet the euro and bet the whole farm. No, but what happens is you have to look at other traders that are going to hold for a lot longer period. They can say, and just like we talked about those banks, we're taking our bearish bets off. We're not saying it's going to fly to 115, but I'll tell you what, we're taking our bearish bets off and we're going to let it run much higher before we try and short it. So when you look at that, you say, wait a minute, I have to trade from a more bullishly constructive scenario. Doesn't mean you can't trade on both sides and watch it get a little bit overdone. Buy here, go long here, go short there if you're day trading / scalping or short-term trading. But you have to keep that in mind, because that helps you. Well, let's say today the euro really gets whacked pretty good because they passed a healthcare bill, which is supposedly not going to. Then you know what? Although it might be a little bit tougher on Friday, but you say, hey, if it dips below, let's say it dips down to 730, I'm going to buy it. And chances are it might just defend that 762, and maybe next week we're moving higher. But I think you have to look at it in that sense. So right now we're going to keep it at 859 for the resistance, and support. We're going to have to keep it. We had that 762, but we'll try and work it a little bit lower in case we get a good scare. So let's go on and move into the 30-minute to see how much lower it potentially could get down to. Let's see what happens if we get a scare. Now, this is on the idea that we don't take out new highs. So let's say with the vote and they get a little scare here. 698 would be one heck of a scare. I'm not going to go that far, but I think that realistically, because I think we're going to have a nice undertone bid, 725. 725. If we get a good little scare, that 762 is huge, but I'm saying is if you see this wild volatility, at least let's say that you were to come in and purchase it at 730 or 737, you kind of have a good feeling as to where your risk is. That's all I'm trying to say here. So we got 725. So let's say look at the cable. Yesterday at 25.37, the high was 25.32. I thought they might be able to push up there and maybe get beyond that, maybe closer to 25.45 or whatever. But today, obviously, if the dollar comes under pressure because they can't pass a bill and all the flows are going that way, I think we have to go in and reach out for the 78%. So let's update this. So you can see here the zone here that I have drawn in with all these touches. That's what I'm going by, not any highs or lows. You can see battle zone here, support here, battle zone, support, battle zone, support, resistance, resistance. So that's what I'm coming up with this number here on the 2564. But we're going to go with the resistance here. Now, resistance in the sense that we'd see some pushback, I think. But if the bill were to pass, not to pass, you'll see a lot of, um, you know, volatility. But we'll go with 25.79 for today's resistance. And for support, let's take a look. We had 24.39. We're going to go with this 24.14 because if they, I don't think that's going to happen, but they would flush out this. So we'll go with 24.14 right now. Now these support resistance zones basically are to go in and encompass the volatility that we expect today. That's why they're going to be a little bit wide. And really the way you want to use it, just like I said about the euro, is let's say they were to pass or something, the euro gets whacked, and you're saying 725. That gives you an area where you can measure your risk. If let's say you say, well, God, that 762 is pretty huge on the daily. I don't want to miss it if that's the case. So you say, well, I'll buy it at 744 or I'll buy it at 737. You kind of know where that downside risk is that you'd expect it to try and hold and get a good defense at 725. Doesn't mean you'll get all the way down there. Let's go move into the Aussie. We had 7603 and it looks like we made it right there. The low was 7607. Okay, pretty close. For some reason, it gets pretty dicey. I like this area with all these touches, which is 75, 76. I'm going to mark that up. There you go. Okay, and punch a little bit lower. I think we will move a little bit lower down here to 75, 67. There. Once again, we're trying to, take in the potential volatility on this. So support's going to be at 75, 67. With resistance, obviously the passage, you see a pretty big unwind and see this thing rally like crazy. Let's call this 76.82. Oh, we already had this one. We'll call it 82 anyway. And the next will go into, well, it's already time for break. So we'll be back. When we get back, we'll go in and cover the Kiwi. And thanks for joining us here on the Morning Edge.